Welcome back. You tune into the newsroom, and now we're joined by Aditi Nayar, who's the chief economist of ICRA. We did see the whole price numbers come out yesterday after, of course, the cooling of the CPI numbers. Now we have the whole price index that has also cooled off. To weigh in on those numbers, we are now joined by Aditi. Hi, Aditi. Thank you so much for taking the time out and joining us on ET Now. Aditi,
thank you so much.
Aditi, my first question is, India's whole price index in the month of November has eased to a 3-month low of 1.89%, as prices of food items have also cooled off. Now, earlier we did see the CPI numbers also cooling off within the tolerance band for the RBI. What are your expectations going forward, and does that really pave the way for a rate cut come February?
Thank you. It's been quite interesting. This month, the numbers broadly came in similar to what we were expecting, and yesterday's wholesale price index inflation came in at 1.9%, whereas our forecast was 2%, so just a little bit lower than that. Going ahead, when we look at the trends for food prices, they're still a little bit mixed. Broadly, if we look at things like Kharif arrivals, the outlook for the Rabi crop, there's quite a lot of positivity as well. But when we look at how quickly the vegetable prices are coming down as compared to seasonal trends, there's a little bit of a mixed picture which is coming through over there. Our sense is that for the CPI, we should be able to get another considerable step down in the CPI inflation to maybe 5 or 5.1% or so in the current month. And if that is the case, then it should be able to pave the way for a rate cut in the February policy. On the WPI inflation, the basket is quite different. The composition is very different as compared to the CPI. So they don't necessarily move in the same direction month after month. With the WPI, what we feel is that there will be a narrowing in the deflation for commodities. And added to that, the depreciation that we're seeing in the rupee would also add to some amount of pressure. Possibly the WPI inflation will actually harden a little bit in the current month. So somewhere in the range of 2.5 to maybe 2.8 or 3%. So it will track a slightly different trend from the CPI in terms of how sequentially things are moving. But they'll actually end up possibly converging closer together in the month of December than where they were in November.
Right. Aditi, also, the food inflation that has been sticky for a while now, but this time around, even that seems to have cooled off. Now, that's a big positive coming in. Is that likely to sustain, though? And does that indicate that the inflation is likely to remain below the 5.7 mark set by the RBI?
So see, as far as the RBI is concerned, what they've indicated is that the CPI inflation is going to move towards the midpoint of its medium-term inflation target band of 2 to 6%. So move closer to 4% sometime in the middle of the next fiscal year. And that's broadly what we're really going to be looking at. The month-to-month trends and the risks or the emerging trends which are there, do they suggest that we are going to be moving closer to that 4% mark or moving away from it, or is the momentum going to stall? As of now, what we feel is that with the December print and with the next few prints, we should be generally moving closer to that 4% mark, which is quite positive. On food inflation itself, as I was saying earlier, there are some broad positives, and the month-on-month sequential trends for some of those specific items are a little more mixed. So the CPI side, the food inflation will cool off further. Particularly with vegetables, the seasonal trend that we see in the month of December, as the temperatures drop, vegetable prices start easing as well. And that is something that will show up more in the second half of the month. On the WPI side, in November, a favorable base effect did pull down the WPI inflation, including food items. But here, perhaps, we will not see as much of a correction in the month of December. In fact, the WPI food inflation might harden a little bit based on the early trends that we're seeing for wholesale prices. And that can happen. Retail prices and wholesale prices of food items can move in a different direction. We've seen that sometimes in the past as well. So overall, our sense is that the WPI will move up a little bit to 2.5% or slightly higher than that in the month of December, and we're hopeful that the CPI inflation will come down to 5.1% in the month of December.
All right, Aditi, one last question. You also have the trade deficit numbers. Now, the trade deficit has also widened to record high levels, with gold being the main culprit. But apart from that, the import bills are also rising. Any take on your expectations on the rupee weakening and its impact on the trade deficit?
See, as far as the print we got yesterday for the trade deficit, there is a overarching, impact of very huge gold imports that we got in the month of November. Now, that's not something we expect will sustain at a level like that month after month. We're hoping that this is a one-off and we're going to start seeing much, much more moderate prints for gold imports in the coming months. As of now, our sense is that the current account deficit in the quarter of October to December is probably going to be around 2.7 to 2.8% of GDP. This will probably be the highest current account deficit on a quarterly basis in the current fiscal year. And typically, anyways, Q4 tends to be a much smaller quarter and often moves into a surplus as well. For the year as a whole, obviously, we have now had to increase our current account deficit forecast. We're now looking at 1.3 to 1.4% of GDP for the full year FY25.
All right, Aditi, on that note, thank you so much for taking the time out and joining us. But with that, viewers, we're completely out of time on this edition of the Newsroom.